Hello, hello, hello. I hope everybody's having a great Sunday night. So again, this is 50 pips, 13th of October, 2013. I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So that was a bit of a mouthful, wasn't it? Let's get cracking. So here we go into another week. I think the first thing to keep in mind is that we still have a lot of event risk coming out of Washington this week. We're going to have a lot of UK data, and we've got ZEW and some other EU data going to be coming out too. I know the China data overnight, or just that came out, has been causing some havoc, got some gaps across on the AUD and on the JPYs. I think some of them or a bunch of them are starting to fill. So again, just keep in mind that gaps tend to fill. You know, they don't always have to fill, and they don't always have to fill straight away. Now, let's take a look. What chart should we look at? Well, tell you what, let's do something crazy. Let's look at blank charts today. So let's start with Euro. What's going on Euro? As we're hovering here, so the first things first is what have I been yapping about? I spent the whole of last week talking about pretty boring, not a lot of updates on Twitter, but basically we've been talking about that 135, right? So just a quick reminder in terms of the bigger picture. Weekly chart, we're looking at this whole base holding. We're looking at the fact that we're moved back above the 200 week, and we're looking at the fact that this whole 50 back move lows to highs, this whole region holding, looking for a rotation back up into 141s if we can break these year highs. Okay, now, and so far the rotations upwards have been very healthy, have been, you know, pretty technical. If you look at it on a daily, we had the 50 back here, long, trigger to the pip in line with the 200 moving average, and this is the one we reviewed last time. I called this one pretty much live on Twitter, familiarly known as gift from the gods, triple confluence trade coming into the 50 back of the move up, 200, 100 moving average, very nice, very high odd setup, and that's completed into the 123 extension. So again, we're bid and we're holding a bid tone, but what's happening is short term, we're struggling a bit ahead of these yearly highs coming in pretty much at 37.10s, okay? So again, as long as we hold above these 35.50s, this holds a bid tone, and we expect this to continue to move in extensions higher. Now, what we said is don't get fooled by dips below the 35s, because the level that really matters in terms of support is that 34.50 to the downside, right? So as long as all these dips, all those guys getting caught shorting breaks of 35s, it's not a level, right? The 35 is not a level as in a level that's going to break and you'll likely see a lot of momentum, because there's a support. So the way you have to look at that 35, and we've discussed that, that's a 35 into 34.50 support for a hold of this move higher to grind higher in extensions. Now, if that level should break, it doesn't mean the upward rotation is broken, but it means likely we'll see some kind of a healthy retracement, you know, maybe into this gap, this whole zone into the 33.10s. You know, we'll discuss that some other time, right? But here, that's why that whole zone to the downside is important to be looked at as a zone, okay? So going into the week, and again, I don't want to go into too much detail because I've gone into it in all the other recording. This is what, you know, what I'd be focusing on is understanding how the market behaves on any kind of dip. Is this level still going to get bought? And to the upside, how are we going to react, right? But as long as that holds, you know, the pressure is still going to be to move up and to try and take out stops to press into those yearly highs. Keep in mind, in the same way that, you know, it's not a high odds play to sell the 35 looking for momentum because this is support zone, you know, every break higher intraday is not necessarily a break up buy, you know, because look at this, you see every new highs, you know, we've got a lot of sellers, so you have to respect the support here. Even though the market is trying to grind higher, you have to respect the support, and you can see that, you know, globally we have made lower highs. So the market is managing to cap this. Now, I wouldn't put too much weight into this because to me it just looks like a very choppy market. It doesn't look like there's been a lot of activity. We've just had a lot of event risk, and I read more into the fact that we can't break lower than that we're getting sold at lower highs. Now remember, what can't go lower doesn't necessarily have to go up, and what can't go up doesn't necessarily have to go down. There's an important piece of the puzzle that a lot of people miss, is that price can go up, down, or sideways. Okay, don't forget the sideways. So right here, look at what happens if the sellers manage to hold these lower highs. Look if we manage to take out some upside, and look what happens into the support. This is really what's important this week, and as long as this hold, pressure remains to the upside. Okay, now that's euro. I'll tell you what, let's do euro cable and euro GPB at least here. So what's going on in cable? So here we're going on cable. You can see here on the weekly, we've been talking also about a move back into the 163s, back into these highs. Very nice rotation, especially once it moved back above the 200 here on the weekly too. It never really looked back, right? Now, the level I've been talking about, and I kept on going on about this week, right? We kept on going about on cable, was the 160. Now, why the 160? The 160 was really the pivotal level where once we gapped up here, we broke up. This is where we got very aggressive buying coming in, and then it held as support, right? Let's get on a 4 hour. It's probably going to be much clearer to see. You see, once we got this, we're grinding higher, we gap up, we hold, we bang through it, and this is where a lot of people were expecting this to have blown its brains out, where no, the buyers came in all the way up into new highs. And what we said, this was the key level, and you see what happened. We come back down, gets bought for that little pop, right? So it does what it's supposed to. It's supposed to be pivotal for momentum, right? Previous resistance acting as support, bam, it acts as support. And then, you know, here it's still holding an extremely technical pattern, as you know, we've come back in, we've put in a reversal candle at high, very nice candle here, very nice sell signal. This candle, these highs never got taken out. Pressure came on, necessarily pressure on, you know, a lot of longs unwinding, and we have this whole move down here where price is coming back into pretty much the 50 back zone. If you look at it from those highs, if you look at it from the down move here, it's smacked pretty much into the 50 back, and it completes the 123 extension. Now, what's interesting here is you see that these 160s, where they acted as support, bam, they're acting as resistance. So you see they're doing what they have to. Their previous resistance is acting as support, previous support is acting as resistance. So this is really the level to watch. Again, going into the week, there's really no change. Here we can put one of our classical chart markings. We have the red line and the green line, and this means this is a pivotal level, bullish for bear line, pivotal for momentum. Okay, if you look back on this weekly, look back on the 4 hour, you see that this whole move higher came into and we broke, right? We broke down right there, and now it looks like this is trying to hold, but it can't. So you see it's once again previous resistance acting as support. So see, it's acting as resistance, and it keeps on getting sold all the way into this 160, which is the pivotal level. So going into the week, what you want to keep an eye out for is how we behave around the 160. Now, what is the level to focus on to the downside? Well, that shouldn't be a surprise because we've been discussing about this for a long time. It's the 5880s. That is the start of the latest impulsive move upwards. This is where we gapped up, we filled, and we created a base where we rallied off, okay? So below 160, clearly pressure is on, and we got a lot of cable data coming out this week, and pressure is on for this low range, but you see it's being defended, right? The buyers are coming in well ahead. But if we get back above the 160 without managing to hold below the 158.80s, you know, there's no reason why this can't continue to move back up, to try and continue moving up in extensions, or at least to try and take a stab at the 61.30s where we got sold. If you remember what we said last time is in the last update, if we rally, we expect the shorts to come in at that 61.30. That's where they have to come in, and that's exactly where they came in. So far, the game plan hasn't changed. The chart is still the same. It's all about 160 to the downside, 158.80s, and this is the next pivotal level, and to the upside, it's 161.30s. That's the next pivotal level, okay? And let's, because I posted the chart and a lot of people were asking about it. This is a very nice chart. What's going on Euro GPB? So Euro GPB, the level 50's yapping on about here is the 85 level. Now, 85. Now, why is the 85 interesting? Well, you can see that the 85 level has been pivotal for momentum. This whole zone has been important in terms of direction, right? Support, aggressive breakthrough with continuation, support, aggressive breakthrough with continuation, resistance, bam, move back down. So it's been really key, okay? Now, the thing we were saying is this 85 has been violated a lot of times. So we said, don't get excited about it. You know, a lot of people were shorting on Friday with stops above the 85s, looking for it to hold. We said it's a very low odds setup because that area has been violated a lot of times. So it's not one of those round numbers we would be too interested in trying to play tight against. And indeed, it's broke. But what's interesting here is that this is an important resistance zone, but it's an important resistance zone not all because it's the 85, it's because the 85 has been pivotal, because we've got this whole zone where we gap down aggressively to take out these lows that it held for so long, okay? So this is an important resistance zone. That's why this is another chart where we said you have to look at it as a resistance area. It's not a number, okay? And then also what's really interesting here is if you look at this, look at the double confluence you've got here. Basically put 200 moving average on the daily. It's coming back into, so really pivotal because once we've broken below, and again, you can go back in the webinars, but we're on these shorts here from the weekly time frames. But here, once we've moved down on the short, right, we've broken back below the 200 days. So if the shorts want to hold pressure on, they have to keep it below the 200 days. So this is an interesting sell zone because you've got the confluence of this resistance zone. You've got the confluence of this 200 here. If you want to push it, you've got the confluence of the 50 back of this latest move down. And also, more interestingly, if you move to the weekly, you've also got the confluence of the 200 week. And you see, it's poked its head above and it's closed above. Now, big question, can it close another week? So this is really, really important level across the board. So I think that was a really interesting chart. That's why I posted it. And I wanted to explain a bit more here what was going on with the different time frames. Again, you know, on the equity side, keep in mind we've got a lot of event risk. I'd expect if we have to fail, we have to fail from higher levels on the DAX, on the ES, on the NASDAQ. I wouldn't be aggressively trying to play the news. This might just be, you know, buy the rumor, sell the news. I think there's just a lot of event risk, and even if you knew the news ahead of time, you probably wouldn't know what to do with it. Nobody would. And so I just caution on the equity side, but I would suspect we need to fail from higher levels levels if we do. So again, guys, Euro Cable, Euro GPB, have an awesome one. Have a great week. We'll see you for everybody for London Open. If you like the content as usual, do not be shy about sharing it. And again, thanks a lot for listening. Take care. Talk to you guys soon. Take care. Bye-bye.